Hello, everybody, and welcome to today's weekly Wednesday webinar. Today's session is our 5-minute brainstorm. We're hoping that in 5 minutes, we'll be able to communicate to you some great tips, tools, and other information you can be using with your clients as soon as today. Today's topic is 4 money tips for seniors in 2021. 2020 was unquestionably a year of financial uncertainty for seniors and for so many of us. 2021 will continue to be a disrupted and unstable year. And with seniors, they are the most vulnerable to health and financial danger, which this year will continue to present. So here are 4 financial tips for seniors to be considering as they navigate 2021. First, let's look at Social Security and some changes for the new year. Seniors are going to automatically receive their stimulus money deposits into and with their Social Security payment. So for the first round of stimulus of 2021, many and most should have gotten their payments by now. And as any other stimulus payments happen this year, if you're on Social Security, this is just going to automatically show up in your account. Also, Social Security increased the cost of living adjustment by 1.3% for this year. And here's a helpful hint about maximizing your Social Security benefit. You want to wait, if at all possible, till you hit age 70. From the time you qualify for Social Security at age 62, every year, the monthly benefit that you will lock in for the rest of your life will increase. So from age 62 to age 70, that benefit is increasing on an annual basis until you reach the max benefit level that you could be receiving when you hit age 70. So if at all possible, wait till age 70 to lock in that max benefit. For long-term care, it continues to be an expensive proposition. But don't forget, anybody age 65 and older, at least 70% of those people are going to need some form of formal long-term care in their life. Now, on an annual basis, the cost of senior living and long-term care continues to increase at a clip of about 5% annually. Now, long-term care insurance continues to be a smart purchase to prepare for that very potential eventual need for those expensive costs down the road. And what has grown into one of the most prevalent common forms of people getting long-term care insurance now is hybrid life long-term care plans, where you have the benefit of a death benefit in the early stages of owning that policy, but later down the road, if you need to convert over to long-term care benefits, the policy will convert. So you have a death benefit to carry you for a number of years while you're paying premiums, and then you have the option to shift over to turning that policy into a long-term care policy, paying out monthly benefits. And remember, underwriting has become much more stringent for both life and LTC products in the COVID era, and that will probably continue for years to come. Underwriting will become much more stringent around people who have had COVID and those that could be considered a higher risk of infection later on, as we potentially are dealing with other infectious disease events over the course of years to come. Consider also the potential of a reverse mortgage. Establishing a home equity conversion mortgage, it's a line of credit against the home as a reverse mortgage, which gives you the advantage of only drawing down what you need, if you need it, when you need it, and only then incurring interest and fees on what you've drawn down. If you don't need it, you don't use it. If you do need it, you use it. You also have the flexibility of paying off what you've taken down earlier, or waiting until the end of the reverse mortgage period when it matures, and then it's paid off with the sale of the home. But remember, as long as there's outstanding money that's drawn down, you are accruing interest and fees. Then let's also remember life settlements, the use of a life insurance policy while it's in force, instead of lapsing it or surrendering it after years of making premium payments. it's a tax advantage option to sell that policy for a lump sum payment today. And it is the only financial transaction available that will actually financially reward people with more value the older and sicker they are. So remember, life settlements are based on reverse underwriting. The older and sicker somebody is, the more likely they are to qualify for a life settlement and the more value, the higher payout they're going to get from that life settlement. And then lastly, don't overlook senior discounts. Member organizations like the AARP or AAA have a whole host of unique discounts and member benefits for those that join the organizations, and the monthly annual fees to join really are negligible compared to what you're going to get in benefits and discounts. And then also remember, there's companies all over the place offering senior discounts on things like groceries, restaurants, entertainment, retail shopping, travel, and so much more. Remember though, you want to confirm what the discount is, and always remember to ask for that discount. If you're in your really getting into your 60s and above, you have a whole host of membership opportunities and discount opportunities. Actually, in AARP, you can join in your 50s, and AAA, you can join at any age. And then with these different companies and discounts that they offer, the age ranges and the discounts they offer are all over the place, with all kinds of options for seniors and their families to benefit. So thank you so much for joining today's 5-minute brainstorm session, 4 money tips for seniors in 2021. Join us every week as we take on a new topic, bring you new information, give you new tools and tips you can use with your clients. We look forward to following up with you, talking to you again next week, and working with you to help you and your clients take control of your retirement using all of these tools that are available to you in the marketplace. Thank you so much for joining us.